go ahead and hop straight into it. First off, I know it's been a minute, so for those who follow, I know it's been a minute. So last week I did not trade at all. I was on vacation. Me and my girlfriend we went to Florida, seen some of her family. It was chilling. It was nice. We had a good time. So I ain't touched the charts at all. Um, Yesterday was my first day in the market. I really didn't want to record it because I had some pretty good experiences in Florida that actually helped shape my trading. So for the first time with my probabilistic mindset, I actually went to the Hard Rock Casino down there. And I was playing blackjack because I mean that's just one of the games. It's easy for me to understand, easy for me to apply what I do in trading. And what I found in blackjack was I was able to consistently withdraw profits, right? And seeing for anybody who's read Trading in the Zone and seeing how Mark Douglas compares the professional gambler, professional trader, the casino, well, really the random trader, the professional gambler slash professional trader, and the casino, I was able to see all of those in person and see all of those aspects come into play. First things first, the casino, they make the rules. So the rules are in their favor, right? The rules are meant so that the casino makes money at the end of the week, the month, the year. Then you have the random guys in there who are willing to go all in, crazy risk management, like they're just hoping to hit big on one hand, and 9 times out of 10, they're leaving the casino with no money. And then you have people who, I don't want to say professional gamblers, but I would say people with a probabilistic mindset who understand I'm going to lose. I need to spread my risk out, stick to my strategy. And those are people who understand I'm not going to make more money than the casino, but I can make some money and walk away with some profit instead of losing all my money. There's so many people here losing all their money. I can find a way to walk out with some profit. So that experience kind of helped me realize some things with my trading. First off, it made me realize that there were certain areas in my trading where I still had the training wheels on, right? An example of that was my two trade limit. In the beginning, that is very good while you're training yourself up, getting yourself used to the idea of spotting and taking only high probability setups. But I realized it was killing me because for anybody who's familiar with blackjack, you're not going to go to the blackjack table and say, oh, I'm only going to play two hands and walk away, because you don't know which hands are going to hit and which ones are not. You could show up to the table and take two losing hands. Most people say, okay, I'm going to go to the blackjack table for about 30 minutes to an hour, right? And then within that 30 minutes to an hour, you want to get as many hands in as you can, because that bigger sample size is what's going to increase your chances of being profitable and walking away from that table with profit. Now, of course, if you sit down and you get a bad feeling, the energy's not right, you take a lot of losses in a row, you can walk away at any time. You can say, you know what, I'm gonna walk away for 10 minutes, or I'm done with blackjack for the night. I'll come back tomorrow, or I'll come back in an hour or so, right? And what I realized in my trading, I was basically showing up to the market and saying, I'm only playing two hands, right? And I wasn't taking full advantage of my entire trading session. Now, the reality is my trading session doesn't present that many opportunities, but there are times where it does present more than the two, and I'm sitting here like, oh man. So what I realized was, just like in the blackjack table, in trading, I don't know which trades are going to hit. Now, now that I have been doing the two trade system for so long, I'm comfortable and confident in my ability to spot high probability setups and only take high probability setups. But and because of that, it made me remove my two trade limit. So that's one new thing with my trading. I no longer use the trade limit anymore. I'm trading from my trading time of 7 to 11, right? Whatever high probability setups come between that time, I want to take them, because just like at the blackjack table, the more hands, the more sample size, the more high probability trades I make myself a part of, the higher chance there is of me leaving the market with some type of profit. Now, I do still have certain things. So instead of using a daily trade limit, I use a daily risk limit instead, and I just play with that, right? So that was another thing from blackjack. I was so consistent. I risk the same amount on every single trade over and over and over and over. Even the trades I wasn't confident about, I was using full risk. Well, now because I don't have a trade limit, guess what? That takes the pressure off of having to risk so much per trade, right? So now I just set my trade limit for the day. So let's say my trade limit for the day is 200 bucks, right? Based on what opportunities I see, what things I see lining up, I need to stretch that 200 out. I don't know if I'm going to have one opportunity or four opportunities, but I need to stretch that 200 out. So essentially, on my first trade, if I risk 150 and lose, now I only have $50 to risk for the rest of the day, which means my next few opportunities, if I see any more, are going to have to be super low. They're going to have to be super low. Or you could just manage it however you want. But now I have that freedom, right? Because now I'm not scared to exit a trade early because I don't have a limit. I could take as many high probability trades as I need to take. And those are the two main things where I realize, like, okay, I'm at a next level. I'm at the next level of my trading. My mindset's there. I understand what high probability setups are. I'm only taking high probability setups. I'm showing up to the market at the same time, on time. And pretty much, yeah, I just decided that it's time to take those training wheels off and take that next step. So my trading has a lot more freedom, but it also feels like there's a lot less stress. It feels like a lot of stress has been lifted off me, and I'm just confident in what I'm doing. So I wanted to just catch you guys up on that. Why I've been gone, where I've been. I ain't stopping YouTube. I ain't stopping posting my things. I finally figured out how to get my face on the screen with the charts without it disappearing when I click on the charts. So that's cool. So you guys might see my face a lot. Some days I might not though. If I'm just looking rough and I just woke up and came straight to the market. Like today, I just woke up and came straight to the market. That's why I got on a wrinkly shirt. I still got the do rag on. I got my little flap up top. Um, but that's not what y'all here for anyway. Y'all here for the trading stuff. So let's go ahead and get into what happened in today's session. All right. So what we see is that on the 3 hour, price has pushed to the upside, impulse to the upside, and now is in a retracement. Now there was a zone right here that price has already reacted to twice, which is why I got rid of it. Um, But right now, price is still in a retracement. Like it pushed down, gave a look like it was pushing up, and then continued pushing down. So we don't really know what price is going to do or what it wants to do. It's technically in a retracement phase, but at any point could flip. We just don't know. So what we're going to do is just go to the 1 hour, see what's going on. We understand that the 3 hour is in a retracement phase. So we're just going to go to the 1 hour and find the structure nearest to the end and see what's going on there. So let me move this over here for a moment. And let's go to the 1 hour. So let's catch it up. So on the 1 hour, the last clear bit of structure I see is over here. So we're going to follow. This was our structure yesterday. This was the low. Price pulled back, broke this low, low probability. So now this is the 1 hour high, and the 1 hour low now matches the 3 hour. So looking at this, we see that price impulse to the downside, it in a retracement, but now it's just consolidating. It can't break below. It hasn't tested the low yet, but it's in a retracement and it wicked above the high, couldn't close above it. It's just playing around within here. So on the 10-minute, we're just gonna focus on whatever the cleanest and clearest structure is to where our area is right here. So the 3 hour is low probability. The 1 hour is low probability. Let's go to the 10-minute and see if we have anything. Now I showed up around like 7:40, 7:30 ish. Yeah, I overslept a lot today. It's all right though. You feel me? We came to the market. We did what we had to do, and that was about it. All right. So focusing on this 10-minute structure and understanding that price is in a retracement. But right now, we're just looking for clean, clear structure. The last clean, clear structure was a break here where price created a low, right? And then price pulled back up to here and broke this low. It was low probability because this was the first break. So we have a high here and a low here. I can go ahead and draw that. high there and a low here. And then we see price broke to the upside. One candle push, of course, and then ever break and close past this high. So we have a low probability high time frame structure as well. So on the 10 minute, we have a impulse to the upside, creating a new high. And now we have a retracement beginning. But there's no zone down here, no high probability zone. So on the 5 minute, we are only focusing on this retracement. So let's go to the 5 minute and let's see what retracement, the structure the retracement gives us. So do we have any structure? Yes, we do. Price pushed here, pulled back, and then broke it. And it's high probability because it broke, gave a second candle push and a third candle push, and then started a retrace. So we can draw the 5 minute low down here. 5 minute low. And then we can go ahead and draw this high probability 5 minute zone. Perfect. Right? And so at this point, we don't really need the 2 minute because we have a high probability 5 minute area. So all we're doing now is just being patient, just waiting to see what happens. Let's go ahead and skip through. Let's see, is the price going to test our zone or is it going to break? Boom. So we got a, nope, it wicked and closed back above. We closed back above. So we got a 5 minute break. So what we want to do is see if this gives us a second candle push. Boom. We got a second wick below, but not a close below, so that's not a push. Boom. Then we got a wick and close below. So we know that this zone is a high probability 5 minute area. So we can go ahead and mark this zone because we understand it's high probability 5 minute. Now, once the 5 minute solidifies its low, then we can refine this if it needs to be refined. So, but what we also see here is that the 10 minute was broken. So now we want to go to the 10 minute and we want to wait to see if the 10 minute is high probability as well. So let's get our next candle. And so one thing that I've started doing is if like the 10 minute gets broken, I'm not looking for any 5 minute moves until the 10 minute solidifies its high or low. Same thing with the 5 minute. When the 5 minute's broken, I'm not looking on the 2 minute until the 5 minute solidifies its high or low. That's giving price to fully create whatever structure it's trying to make and then continue from there. So price gave a second candle push here. So the 10 minute is high probability as well. Let's see where the retracement starts. Boom. So the retracement starts here. Let's go to the 5 minute. So the 5 minute and 10 minute have the exact same low. So we can get rid of the 5 minute low right here. And we're just going to move the 10 minute. The 10 minute and 3 hour align, but I'm going to just lay it on top just so I remember and notice that it's there. But guess what? Now we have to draw a 10 minute zone. Now I'm going to leave these 5 minute zones there, right? Because those are still high probability 5 minute zones that can be reacted to no matter what this 10 minute zone looks like. The difference is if price pushes within the 10 minute and doesn't test any of the 5 minutes, then I'm going to have to get in off a 10 minute confirmation. If it tests the 5 minute within the 10 minute, then I'm getting in off a 5 minute confirmation, right? The zone that price is testing is the time frame that I'm looking for a confirmation on. 5 minute zones need 5 minute confirmations. 10 minute zones need 10 minute confirmations, right? So it's that simple. So we have our low, we have a high probability 5 minute here, a high probability open zone 5 minute here, and a high probability 10 minute here. Now we can manage and watch everything from the 5 minute because that's the first zone that's going to be tested. So as of right here, we go from the 10 minute, we look for uptrend on the 5 minute. There is no uptrend. We see that the structure matches. Now we could have updated our structure and moved it to right here. But the reason I didn't do that is because I already knew that the 5 minute actual structure was right here. And this low right here kind of aligns with this one. So I was like, I'm going to just keep my 5 minute zone where I have it and, go from there. So price got close, but it did not touch it. So now we're just waiting. Either it's going to break the low or it's going to test again. It got up there. Let's see if it tests. Nope. No test still. So boom, we finally get our first test of the 5 minute. Boom, we get our confirmation candle. Now it is a pretty deep candle, but again, I've waited all day for this opportunity. I've waited the entire session for the opportunity. Um, Price just created a new low. It pulled back to a zone and it gave a very, 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 very that this candle right here gave a lot of momentum off that zone. After playing around it twice and finally tapped into it and gave a lot of momentum off. So on this trade, this was the first trade I entered today. And so this trade was 15 pips. So again, I looking for 32.5, which is my original. And again, I only used a portion of my risks, right? So let's see what happened. So price wicked me into this trade. So I was in this trade. This was my first trade taken. So now that I am in this trade, guess what I want to do? I want to go to the 2 minute and look at the downside push. And we just want to look for something to manage or potentially scale in off of. So what I did, I went to the 2 minute. Downtrending wise, there's nothing that was broken. So the last bit of structure broken was right here. So looking at this last bit of 2 minute structure, right? Price broke right here. Broke, gave a second candle push and closed. So that means that we have a high probability 2 minute zone. Now this 2 minute zone serves two purposes. This serves as a potential scale-in opportunity, and it serves as a potential exit point if price breaks past and closes. But if it breaks past and closes, I'm probably getting stopped out either way. So what we could do, we can get rid of this. We understand that now that the 2 minute low matches the 10 minute and the 3 hour. So now we can just refine it. I refined it back to right here. One, because of this gap, but we already see that it's tested and we know that this is at least within 50% pullback range, right? Within this yellow is at least 50%. So now we're on the 2 minute and we just want to see if we get a second confirmation. So we got a confirmation here. So for me, I wanted to give the stop loss a good amount of room. And let's see what happens. Boom. So we did get wicked in here. What I'll say, price did wick back up and stop us out. So we did get stopped out of the scaling trade, but we still were in the original. And so because it was still within this zone, though, I said if I get another sell confirmation, I'm going to get in again. I just will have a better stop loss. So price, just like on the 5 minute, gave a heavy, heavy downside push. So I entered right below here, almost at right around the exact same area as the first trade. Now I got in this at 11 pip stop loss. My stop loss was above here. Well, my stop loss was really 12, but you guys gotta remember I add a pip, so it was 11 on TradingView, but on my platform TradeLocker, I put it in as 12. So it did still slightly come above here, but it was supposed to be higher. But them spreads sometimes just get you in later than you think you are getting in. So this was one of those cases where I thought my stop loss was higher, but the spread got me in a little lower. But I got in for an 11 pip stop loss, and that just means I'm looking for about 24.5 pips on the second trade, right? So let's see what happens. Boom, we get wicked into here too. So now I'm in a 5 minute and a 2 minute. So guess what I have to do now? Now I have to manage this trade from the 1 minute. So now I'm going to go to the 1 minute and let's see what's happening here on the 1 minute. So on the 1 minute, the last bit of structure I have kind of falls within this same area, right? So I could just leave it or I could draw it on here, right? But I'm going to go ahead and draw it on. So now we have a 1 minute zone. So I'm going to get rid of this 2 minute zone, right? Because the 1 minute zone gives me a better opportunity to exit. And I'm going to pull it here. Now, again, like I said, I typically don't enter off 1 minute trades. But again, like I said, my confidence Now that I have removed the um, daily trade limit as far as how many trades I could take, I'm more comfortable taking chances on things and just reducing the risk. So to give an idea, like my first trade, this first big trade on the 5 minute, I risked about $60 on. This second trade on the 2 minute, I risked about $40. And this third opportunity that you guys are going to see me get in. So disclaimer, I got into three moves, three positions on this same move. This third one, I only risked like $25 on it. So I reduced my risk as I scaled in on lower time frames and continued scaling in. But and that's to protect myself in the event. Sorry, my shoe came on. My house shoe. But that's to protect myself in the event that in the event I do lose, right? I'm still not losing that much, 60, 40, and 25. You know, it's a little bit over $100. Um, but I'm not putting myself in a bad position to lose too much. So on the 1 minute, I see this was the last bit of structure broken um, over here. Yes, I did that wrong. This was the last bit of structure broken. Well, oh no, my bad. Because I was looking on the 2 minute. On the 1 minute, this is the last bit of structure. It's high probability. So I'm drawing this zone on here too. And I'm willing to get in for just a lower risk because I still have risk left available for the day. Again, my risk for the day was 200. Right now, I'm in 60, 40, and I lost 40 on my first trade. On that first scale in that I got stopped out on, I lost 40. So I'm still have about $60 left in risk that I can use, and I'm only going to use 25 of it on this move. So price pulled into this zone. Now I typically don't enter on 1 minute. So the deal I made with myself was, hey, it's testing a 1 minute zone, but I need 2 minute confirmation because I typically don't use 1 minute confirmation because the 1 minute is just so erratic. It could do one thing this moment and something else the next. So now off of this 1 minute zone, I got a 2 minute confirmation. So what I did was I just entered it normal. So this one had about a five. I did give it a lot of room. So I gave it like a 5.5 pip stop loss and 13.5. Right? So again, the way I managed this trade once I was in it, it was a little bit different than I typically do. I still set every TP to 1 to 2 initially, but you'll see kind of how I manage it as we go through it. So let's see. Boom, we got pushed into this trade as well. So what I did split screen and manage it from the 5 minute and the 2 minute, but I'm gonna just show you on the 2 minute how I managed this trade. So we got pushed in, we got a lot of momentum. Let's see, we got our next candle. Boom. Price didn't really pull back. It still wicked below, just slowed down a little. So this first trade hit TP. This last scale in I took for 25 hit TP. But rather than exit, I said if price is going to keep pushing, I'm just going to see if price can make it to this one. So I'm going to hold this position and see if price can make it to the TP of my second trade. If it starts reversing, then I'm going to just cut this trade and I'll still have two trades left potentially. So let's see what happened from this point. Right? Price kept pushing. Price kept pushing. Boom. Price smacked through this second one. So once price smacked through this second one, again, I had the same mindset. So right now I'm in this first trade for about a 1 to 5. And this second trade just hit TP at 1 to 2, right? So now I'm going to see if the second trade can hold all the way down to the last TP. Right? So the first trade that I took, once it got down here and broke to here, I went ahead and closed this first opportunity out. So that one I made about a 1 to 5 off a $25 risk. My second trade just hit TP and I'm managing it the same way. I want to see if it's either going to clear TP or if it starts reversing, I could just close it. I'm still in profit either way. So let's see what happened next. We got a bit of a pushback, but it still created another low. So a retracement hasn't started for me to want to exit. Because again, remember, once price starts pushing, once it retraces, that's what I need to be asking myself. Is it worth staying in through this retracement or is it better to exit with what I have now? Because let's look at where the retracement potentially could go. On the 2 minute, the last low was here, and then price has been pushing ever since. So if price starts to retrace, it can retrace all the way back to drawdown. And right now, I'm in profit with a full win and almost a full win on my original trade. So if price, whenever price shows a sign of retracement, I'm exiting. I'm not about to sit in here and potentially get stopped out and put all the way back in drawdown. I'm going to exit with what I have and wait and see if another opportunity comes. Now, another reason that I was going to exit if price began to retrace is because it's so close to the end of my session. I don't want to have to hold through this and then wait for it to get back down, because there's no guarantee it's going to get back down, and there's also no guarantee it's going to push down with this much momentum. On the 2 minute, it looks like a lot of candles, but let's go to the 5 minute. On the 5 minute, you see this all happened within 1, 2, 3, so about 15, 20 minutes. This all happened. Um, so again, we holding on the second trade. The first trade I've already closed. So I closed that one with about like 120. I risked 25, made about 120 off of that first trade. The second trade I risked 40. So right now I'm up about 80, 90 bucks. Let's see. Boom. Price smacks TP. And as soon as it smacked through TP, I closed this second one, right? So I closed the second one. That second one, I risked 40. Well, let's go back so we can see. I risked 40 on the 1 to 2, ended up closing out with close to a 1 to 3. So I made about 115, 120 on that one too. And then this third trade, this which was my original one, I'm not trying to hold out on. My original trade, I'm just holding for that 1 to 2. And I got that 1 to 2 price wick past my stop loss. So that 60, I made about 120 off that too. So in total on this one move, I made about 380 around there, because I made 120, well, like 360, because I made 120, 120, 120 on all three trades basically. And then I only lost the 40 bucks from the first scale in that I lost. So I finished the day pretty good in profit, all off of one move. This was the main move, but like I said, taking those training wheels off and understanding that if I have high probability opportunities, I need to take them. If I'm not confident or I'm already in a trade, I could just reduce the risk so that I can still get in those trades and still potentially make profit. Because think about it. I could have just took this one trade and got a win, but I tripled the outcome by scaling down, taking every single high probability opportunity that presented itself and just reducing the risk, right? I reduced the risk on them. If I would have closed them at 1 to 2, yeah, I would have made less. But because I knew I was still aiming for this TP down here, I didn't mind letting my first trade see if it can run to the second TP, and letting my second trade see if it could run to the third TP, because the third TP is ultimately my main TP anyway. That's the main trade goal, is that price makes it down to here. The other TPs are there as like manages. Like, okay, I hit 1 to 2 on my scale in. Now, if price starts to play around, I'm going to close the scale in. But ultimately, I want to see if price can make it down to my original TP that I'm looking to get to. And today it did. It worked out for us. So overall on the day, we took 4 trades total. And we won 3 of them, lost 1 of them. Out of the 3 wins, 2 of them were scale-ins, which you guys see, and I explained to you how I cut my risk down. I typically don't talk about the risk factor, and I just show you the moves I got in. Today, I'm telling you about the risk factor. So the first trade had the biggest risk of like 60 bucks on it. The second trade had a lower risk of about 40. The third trade had the smallest risk of about 25, and they all kind of pushed down to my TP, which allowed me to make triple what I would have made if I just took this one move and waited for this move to play out. Now, it ain't something that I'm going to recommend if you're not comfortable with. It definitely takes some time to get used to scaling in and how you manage your risk if you scale in. Like, it took me a while to get used to scaling in. I stuck to my one trade, but another little thing about blackjack, that I liked was the more hands you play, the better chance you have, right? So let's say you at a table and it's a $10 minimum. Let's say you up pretty big where you could risk $20 per hand. Now, think about it this way. You can risk $20 on that one hand and you don't know what's going to happen. Or you could split it and risk $10 on 2 different hands, right? That increases your chances of winning at least one of them, in theory, right? Because if I'm just risking everything on one hand, I'm putting a lot of pressure on that one hand to work. If I'm spreading it out between two hands, I'm taking the pressure off that one hand and giving myself two options where, hey, if both of them win, great. If one of them win and one of them loses, I still come out a little bit profitable. And if they both lose, like I'm only losing the same amount I would have lost if I just put that all on one hand. And now that's something that I've kind of implemented into my trading, which you guys seen just now. Like I could have just risked like 100, 120, 150 bucks on this one move, right? But by the way price was shaping up, by how consolidated all price was, like you got to remember the 3 hour was low probability, the 1 hour was low probability, and the 10 minutes started off low probability. I wasn't super confident in the moves. I was like, price is a little bit consolidated. It can really do anything. So I'm going to go in with shorter risk anyway. So that's why I started with 60. But then I seen another move and I was like, okay, instead of me risking 125 on this whole move, let me do 60 on the first move. And then I get a scale in for 40. And then I get another scale in for 25, right? And it took the pressure off of this one move having to work, and it spread the pressure out between the three different moves that I took, which, if the first move hit and then the other two didn't, guess what? I would have closed with some profit and closed the other two early. If the first and second move worked and the third one didn't, I would have had a good amount of profit and I would have closed the third one early. But in this case, all three of them worked, so I came out with a big win for the day. So that's another thing that I kind of learned at the casino. Like, spread your risk out. Don't put so much pressure on one trade to work for you, right? If you're not comfortable with it or confident in it and you have the ability to risk 100, 200, 300 bucks on a trade, if you're not confident, don't risk $300 on a trade. Reduce that risk. Only risk 100 on it, and if you get another high probability setup within that setup, then risk another 100 or 50 or 60 or 70, right? Just distribute it. And honestly, I mean, after today's session, I feel good. Let's see where the market is now. Okay, so the market, so good thing I exited because price is now playing around this low. Like if I would have held, price would have gave me one more chance to take profit, and now my session's over. But overall, by taking those training wheels off and just honestly now, I understand what my strategy is. Um, I understand probabilities a little bit better. I will say that that was a very, 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 very important moment going to that casino. Because, you read Trading in the Zone, which I keep my Trading in the Zone right here at my desk. When you read Trading in the Zone and he compares trading to casinos and gambling, like, you can understand it. You can picture that in your mind and understand, like, if you play any card games or any game, or probably even if you play heads or tails, you understand the probability he's talking about. But going in person and seeing it in action in person, seeing myself show it with a probabilistic mindset, and pretty much every time I sat down, I was able to extract money by the time I left the table. And then seeing other people who were kind of all over the place, no real strategy, just risking it all here, just going off gut feeling, seeing them walk away with nothing, and then seeing the casino really not care. They understand that their rules are going to make them more money than not. So one person's winning some money, they're not phased by it because they got 10 or 20 other people who are losing everything they came in with. So seeing all of those aspects in play just made me really evaluate my trading. Like, okay, if the trading in the casino is so similar, right? What about the casino is not reflecting in my trading? And it made me reevaluate, take a look at some things, and honestly, I feel like I came back a much better trader, just a much freer trader. Like, I don't have that anxiousness, that stress, that anxiety. I understand what my goal is, right? You go to the blackjack table, you don't say I'm guaranteed to risk this much but this many hands, right? If you go to the blackjack table with $100, you're probably going to say, let's say you're at a $5 table, you're probably going to say, I'm looking to pay about 10 $5 hands. If I lose my 50, I'm gonna take a break and then come back or go to a different $5 table and try to make something work with that other 50, right? And that's what I'm kind of doing in the market now. Like, I'm saying, okay, today I'm only trying to risk 200 total. How do I want to divvy that 200 up. I don't know how many trades I'm going to see, but let me just go off of how they look. Let me go off of the confidence. Let me go off, is the high time frame low probability or high probability? Is the middle time frames the low time frame? What is everything looking like? And then based off how everything's looking like, I kind of just evaluate like, I don't want to full risk, cuz the way I determine my daily risk limit, I determine it at the beginning of the week, but pretty much I just do whatever my max trade limit is. So my max trade limit right now is $100. So the most I can risk on any one trade is $100, and I multiply that by two. So that gives me my $200 limit. So that's equivalent to me taking two $100 trades and losing both of them. So that's why I have 200. But instead of taking $200 trades and losing both of them, guess what? I'm just spreading that 200 out. So I do 60 here, 40 here, 30 here, 25 here, right? Like I'm just spreading it out versus putting so much pressure on one or two trades to have to work because I'm using all of my capital for the day on it, right? And just like on blackjack, you don't like I said earlier, you don't show up and say I'm gonna play two hands and leave, because there's no guarantee either one of those hands are winners. You're probably gonna say I'm gonna come here from that for an hour and see what I can make out of, see if I can come away with profit within an hour. And that's why I have my session, right? Between 7 and 11, I'm coming to the market, spending time with the market between 7 and 11 o'clock. And just seeing if by the time 11 rolls around, what was I able to make out of the market? Was today a day that I was able to make out some profit? Was today a day I was able to not make out profit? I broke even? Did I lose a little bit today? And then I walk away and come back, right? It's also helped blackjack. This is the last thing I'm gonna go in. Blackjack helped me understand that what's happening in the market when you're not there is none of your business, right? It doesn't matter, because in blackjack, when you walk away from the table, they still play. Everybody's still playing. Just like when you walk away from the charts, the market's still moving. But whatever happened while you were gone doesn't matter to you, right? If everybody won the last 10 hands when you walked off, how does that help you when you come back? At the end of the day, you still got to play the next hand, and you still don't know if the next hand is going to be a winner. And that's just like the market. Now that I'm done with my session, I have no reason to come and check on the charts, check to see where price is until tomorrow morning, right? Because none of this stuff is going to matter. None of this 5 and 10 minute structure matters to me, because tomorrow I got to show up and see what 5 and 10 minute structure is doing then, and make whole new trades that have nothing to do with the trades I took right now. So under that last little piece of understanding just made me just so at peace with when my session's over, just walk away from the charts, take the rest of my day to go to work if I have to work that day, or just enjoy the day in general, and then come back tomorrow. Like, it doesn't matter what's going on, because I know sometimes we get anxious, or let's say you take a loss at the end of your session and you're like, I know price is gonna make it down there, and you keep checking it just to see that it's going down there. That's doing more harm than good to you, because at the end of the day, whatever happened happened. Once you make your decision, stand on that. I was about to cuss. Stand on that. Stand on that decision that you made. Like in blackjack, once you see the card, the dealer can't take that back. If you say you want to stay, you can't go back and say, "Oh, can I hit that actually?" No, you can't do that. Once you make that decision, you gotta stand on it. So once you make your trading decision, win, lose, or draw, stand on it. If it turns out to be something negative that you didn't want or expect, then guess what? Learn from it, take it on the chin, move on to the next opportunity. If it's something good comes from it, still learn from it and move on. At the end of the day, you gotta show up and keep doing it. Keep doing it. One trade ain't gonna get you out of your job and get you out of your stuff. You gotta keep trading every day, right? I can make 10 grand today, but by the time I pay bills and do everything I do, I'm not gonna have 10 grand. And if I want to sustain myself out trading, I gotta trade again to try to make another 10 grand or 2 grand or 3 grand or whatever I'm trying to make from it. So you got to keep showing up every day. Every day ain't gonna be the same. Every day gonna be different. Every day not gonna be wins. Every day might not even be losses. Sometimes you might not even see no opportunities for the day, but you still got to show up and spend that time with the market, because if I don't show up to the market, I have no potential of winning. The same way, if I don't sit at the blackjack table and play any hands, I I have no potential of winning. If I'm just sitting there watching other people play, that ain't helping me make no profit at the table. If I just show up to the market and I'm like, oh, I'm just gonna watch, I'm not gonna take any high probability trades, even if they present themselves, that's not helping you make no money. You just watching everybody else make money that you were able to actually perceive, but was too scared to execute on. But that's where I'm gonna end it for today. Today was a good trading day. I am going to be back. Y'all are gonna start seeing my face a lot more. Again, now if this is like one of them rough days, like today a little bit rough day, but it's been a while. I ain't seen y'all in a long time. So I ain't mind. But more days than not, I am gonna have my little floating thumbnail up so you guys can see my face. See the emotion, see me actually talking as I'm going through these charts and telling you what's going on. And it lets whoever's watching this know exactly what I look like. I feel like most people wonder who's behind the screen, who's the voice talking. It's me. It's me. But um other than that, man, we just gonna show up tomorrow, see what happens. Take breaks away from the charts. I'm not gonna lie. I was one of those. I have to show up every day. Have to show up every day. Have to show up every day. I learned a valuable lesson that if you keep on just showing up to show up, eventually you just lose it all. And it's not because you're not showing up and doing the right things over and over, but it's because you become mentally exhausted, right? You're not giving 100% focus to whatever you're doing. You're just showing up to get it. It's kind of like your job. You're just showing up to get it done. You're not showing up with that laser focus. When you show up to the market, you need to have that laser focus ready. If the laser focus ain't ready today, take today off. If the laser focus ain't ready at the beginning of your session, take 30 minutes off. Take an hour off. Go outside. Take a walk. Brush your teeth. Wash your face. Get in the shower. Do something. And then come back to the market and see if you are mentally prepared. But after taking this week off, I didn't realize how much I needed this week off, that week off, until I actually took the week off, and now I'm coming back, and I feel so refreshed, so good. So one of the main things I do now is once I sit at my computer and I'm here for about 5-10 minutes and mark up all my stuff, I'm constantly maybe every 30 minutes to an hour just checking my in with myself to be like, hey, are you still good? Am I still mentally straight? Am I stressed about anything, or I'm just 100% laser focused? If I'm 100% laser focused, I'm going to stay in the market and keep looking for moves. But the minute that changes, I'm okay with leaving for a day. It doesn't matter to me. If I walk away from the blackjack table right now and somebody wins $100,000 after I walk away, what does that have to do with me? Same thing with the market, right? If you walk away during your session because you're not mentally there, and you come back the next day and see that, oh, a winning trade was possible, what does that have to do with you? If you're not in the right state of mind, you might not have even caught that winning trade to begin with. Who's to say that you would have caught that winning trade knowing that you weren't 100% focused in? So never be afraid to walk away. Don't be greedy like, oh, I don't want to miss out on this. Bro, I was like that. And I realized that you need to take breaks from the market. When you feel mentally exhausted and tired, take a break away. It's going to be there the next day. It doesn't matter what's happening on the days you're not there. The only thing that matters about the market is when you're there, right? And that's why, like, I kind of played with last week's price just to practice certain things. But overall, I could care less about what happened last week because I wasn't here. But guess what? I was here today and I was here yesterday, and those are the things that I care about. Even yesterday, I was here yesterday, I reviewed yesterday, and I moved on. Now I can care less about what happened yesterday. Today, I was here today, took some trades today, reviewed it live with you guys on here. Now I could care less about what happens for the rest of the day or what happened today. Now I'm just focused on showing up with the best state of mind that I can tomorrow and seeing what we can make happen tomorrow. But I'm done. I know this video ended up being super duper long, but I feel like there was a lot of good gems in here. Um, Tomorrow's video will be back shorter, but hey, I'll see y'all tomorrow. Best of luck.